Hey everybody, so today I just wanted to talk about the markets again and just do a quick overview. So the first stock I want to look at is Apple, and I want to point out something very key that I noticed. So if we go on the day, you can see that we rejected this area right here, and we eventually closed at 137.59. So what's so significant about this? Well, I'm going to show you. So if I go onto this weekly time frame, we can see that this area was prior support, and we actually broke that area today and we closed underneath it. So if I really zoom in, I can see that that area was 137.69. And what did we do today? Well, we briefly came over that at the end of the day, and then very purposely we just sold off just enough to close 10 cents under. So to me that's very bearish, and I do think Apple could see continued selling. Now, what kind of makes me a little bit skeptical on that is when I go on the 1 year and I look at the Bollinger Bands, we have several weeks of selling, and we're several deviations away. So where we are right now is we're basically at the bottom of this Bollinger Band, which is about 2 deviations away. But when we're right here, we were almost something like close to maybe 3 deviations when we were at the bottom right here. So we're pretty oversold. But we could continue on this down path. That's perfectly reasonable, just given that we already had so many weeks of selling. And the S&P 500 and the Nasdaq, I believe, are on their 7th week of selling. Now, the one time in history where I really go back, I can see that is the 2001 crash. So at that point, I saw eight weeks as the maximum. So it's very possible that we could have an 8th week of selling. I mean, why not? We've already had 7. So very, very possible. Now, if I'm looking for support on Apple, closest support I could see is probably right around, let me take off the Bollinger Bands, right around this 132 area, a little bit below that. You can see these little gaps right here. And they eventually got filled, but we could go back and could just go right back down to these gap areas. They are a popular area where stocks do like to come back down to. So I do think that we could get back to that area. And then even below that, I would say we could see some support right around here, around 121-ish. And then if we were to really sell off, like I'm talking about a full-on crash, I think we could go back to fill this gap. Now that does sound crazy because this gap is all the way down here. Oops, I lost it. Where is it? Yeah, so that gap is all the way down here at around 95. So yeah, we have this gap that's never been filled. And I believe this happened, let's see, that was the stock split. So yeah, we have this gap that goes all the way back down to the stock split. So yeah, that could very possibly get filled. Now that is a little bit scary to think that Apple could come down all the way to 95, but I do think it could happen if we just have a full-blown crash. So yeah, that would probably be like my lowest area, maybe even below that. But if we go below this, I do think it'll get bought up pretty quick. But this is probably like my worst case scenario for Apple, is that gap fill all the way down there. And let's look at the weekly time frame. So yeah, weekly time frame, it's just been a massive beating since we fell underneath this 50-day on the weekly. We almost fell below the 100-day on the weekly. If it wasn't for that last minute pump, we would have probably been below that. So the weekly 100 MA is 137. 0.26. So, we could possibly fall underneath that next week. Very possible. And I do want to look at the options chain. So for Apple, we have a lot of put premium going into June. I would say most notably this June 10th. So right here on June 10th, we have these 160 strike puts. And these people paid above the ask. So they were a little bit urgent in getting these. And it's 36.19 million in premium. And the amount of contracts that are open right now are 15,300. Now I'm going to show you how you can actually look this up on Webull as well. But the way that I found this was through this little bot that I have in the Discord. It's called the Options Fan Bot. And you basically type exclamation, big flow, and then you type the ticker. So if you guys are in the Discord, you can look that up through the Options Fan Bot. Now I'm going to show you how you could confirm this through Webull. So we're going to look for the 160 strike June 10th puts. So here we're going to go on the options chain. We're going to look at June 10th. We're going to look at the puts for the 160 strike. So here we can see that 15,300 open interest. And this is what it's currently going for. So if we wanted to buy this right now, it'd be somewhere in between these two prices, the bid and the ask. So let's just actually get a calculator and calculate what this is worth right now. So if we have 15,300 of open interest, then we can multiply that by the bid. So let's just do 2,060 because 100 shares is one contract. So we got to multiply this number by 100. So yeah, this at the lowest side, it's worth 31.5 million right now. And on the high side, so if we're going to take the ask, we're going to do 2,400. And we're going to multiply that by 15,300. So 36.72 million. So that's the amount of put premium that it's currently worth. Now, what did they buy this at? Well, let's go back and look. They bought this at 36.19 million. So they paid above the ask, as you can see. So now let's go ahead and look at SPY, S&P 500. So if I'm going on the 1 year, it's very clear that we're just in this downtrend right here. Now the one thing I want to note is where we closed. We closed right on the support line, as you can see. We actually fell underneath it too, but where we closed was right above that. Now, I'm going to look at the weekly. On the weekly, we closed under the 100, so that doesn't look too good. So the prior week, we did close above the 100. Now we're underneath the 100. And just look at the size of this candle. It's actually pretty big. And where we are is right smack in the middle. So, we have wicks on both sides, almost of similar length here. So it's really hard to say. I mean, in this 1 week, we tagged the bottom and the top of this trend channel. So what's going to happen next? I mean, if we fall below this, it's going to be pretty bad. So if we do have another week of selling and we fall below this trend channel, I think it's very likely that we could just see a straight crash. And that could take us to 350. Or what I'm also looking at is, I'm really zooming out here, and I do see, let me just take out the moving averages, that we have this very old trend channel that we've been working off of. And it wasn't until we got all this stimulus pumped into the market that we had this massive rally. So where we are right now is we actually got caught at the top of this old trend channel. So we could just fall right back into this trend channel right here. And I would say the low would be like possibly 325. Now that would be really bad. But if you look at this trend channel, there's been many times where we fell underneath it on a straight crash. So I would think a very hard crash could possibly be a little bit below this. You know, maybe something like 279. Now I think that that would be like a dip that gets bought up really quick and then we go right back into this channel. So something to look out for. We are in this tiny little channel right here, but we could just funnel right into this wider channel that's been around since 2008. Now I do want to take a look at the options chain as well for SPY. So right here for SPY, I would just ignore these because these expire today. Let's ignore that as well because that expired today. Now the ones that I'm paying attention to are all these 17s. As you can see, there is a ton of them. Almost not a single call in sight. Now this is definitely kind of scary to me. This is why I'm leaning a lot more bearish. Because if you just look at this, just right away there's probably over 50 million in puts just on this one expiration date. Now this happens to be the third Friday, so this is the options expiration for June. Now there is also this one day, the 10th, which also lines up with that Apple put where we have 11 million in premium. So that's something to watch out for as well. Now let me take a look at my important dates here. The 10th happens to be the June CPI. So I think this is mostly just a CPI hedge right here. And these are possibly CPI hedges as well. But it is a pretty insane amount. So I do think that, you know, these people think that the market could crash within this time frame. So, you know, they're really loading up the protection. So it could very well happen within the next month. You know, we could see that crash. And we are very, very close to it. I mean, we're basically in a crash right now in some sectors, but I'm mostly focusing on the S&P 500. So I think the S&P 500 could go into a pretty deep crash here within the next month. I think that's very possible. And to confirm this, we could go ahead and look at the options chain for the 17th. And we could look at some of these different strikes. So let's look at the 385 and the 375. So here we're going to go on options and maximize this. Going to look at June 17th. Now we were paying attention to the 385s. Alright, so right here we have these 385 puts. You can see there's 67,957 open interest. So now let's double check that. Yep, that's correct. And the 375 as well. So 48,210. 375, 48,210. Yep, that's correct. And let's look at the premiums again. So here we have 14.3 million and 11.56 million. So we could calculate what, so for example, we could just calculate this one right here, what this is worth right now. So 67,957 times Now there isn't that much of a discrepancy between these prices, so I'm just going to take the bid. So that's 10.25. Oh, oops, I gotta multiply that by 100. So yeah, these are worth almost 70 million right now. And what they bought it for is, let's see. Yeah, they bought these for pretty cheap, as you can see. So they're worth significantly more right now. So I do want to look at the Bollinger Bands here. Now we are about, so right here at the bottom we're about 2 deviations away. Now we're probably like 1.5 deviations away or something like that. So yeah, altogether SPY doesn't look too healthy. We did crack below that old support. So if we really zoom in here, let's see what that is. 385.15. We actually cracked below that intraday. As you can see, 380.54 is what we really came down to. So yeah, this is starting to look a little bit ugly. I guess the one bright side is that we didn't close all the way down here. Because if we did close all the way down here, then I think, you know, we'll just go all the way down here. So maybe we could drag this out a little bit more. Now, if we do break out of this channel, I would get really worried because what could happen is we could just draw a bear flag. And then we could just go another leg lower. So that could entirely happen. So if we do have some bullish looking breakout, what really needs to happen is that we need to get back above this 50-day, and that's all the way up here at 429.11. And then that would just completely invalidate any chance that, you know, we could have a bear flag forming, because at that point it'll be almost be too high because it will be past this previous high right here. So I would definitely want to see over 430. Even better would be over the 200-day. So if we can make it back above the 200-day, then, you know, I think that the bear market is definitely going to be over, and, you know, we could see a rally again. But I really don't see that happening. And I think the more likely scenario is that we build out a bear flag and then we take another leg lower. So those are my thoughts on SPY. And then when I'm looking at the VIX is a little bit interesting here. So we can see that the VIX has just been rejecting this line right here. And we've been moving pretty crazily. So I do think at any point, if we get above this resistance line, the VIX can really shoot off. And if we get above 37, then, you know, I think the next line is definitely going to be all the way up here to about 39. And if we really zoom out here, you know, maybe on a full-blown crash, we could start seeing VIX all the way up here, maybe all the way up to these 57 areas, 58. So that could entirely happen. Just keep in mind, the VIX right now just looks like it's drawing up some massive cup. And if we do break through this area right here, especially right here and right here, then yeah, I think things get very, very dangerous. That's going to be a full-on crash. Now with Tesla broke a pretty important area today. It broke this line of support right around 700. And you can see we closed pretty low as well. There's quite a bit of selling volume behind it as well, as you can see. And The interesting thing is that when you look at this trend line right here, we basically fell to the bottom of that trend line, and these two trend, this trend line and this trend line are almost intersecting here. So what could be happening is that this smaller trend channel could be funneling into this larger trend channel that was the previous downtrend channel before we had this massive rally. So that could be what's happening here. And we could fall as low as 538, maybe even lower than that. So it's entirely possible that we could see Tesla go all the way down here, right around 340. That'll probably be like a pretty severe crash for that to happen. But it could entirely happen. I mean, just the way things are going right now. And Tesla PE multiples are definitely very, very high right now. So if we are getting a valuation reset, then yeah, I mean, this could trade at much lower multiples if that's what they're attacking. And especially if we do get a weak earnings, then yeah, I think Tesla is just going to fall off a cliff. Tesla's always just one earnings call away from falling off a cliff. That's why I've never been too interested in owning Tesla shares. It's just a very scary stock to be in my opinion. Now, if I am looking at the weekly, we fell below the 100 on the weekly, which was 707.85. So this does start looking a lot more bearish. So we actually have the full bear trend on Tesla as well. And the way things are going to look, I'm pretty sure this 50-day moving average is going to cross underneath the 200, and we're going to have a death cross soon as well. So I do think Tesla is in for a lot more pain, especially if earnings are weak. The one thing that could save this is probably good earnings. Now, Amazon. There is something I want to point out on Amazon. We do have the Amazon stock split, which is officially we're going to see the share price change on June 6th. So that's actually right before CPI. So that's going to be interesting. That happens to be on let's look. June 6th happens to be on a Monday, which is going to be in June. And right now, I would say we're following this downtrend line. So we're right on it. We actually closed on this longer term trend line right here, as you can see. So it'll be interesting if we start breaking below this and we close below this trend line before the actual stock split happens. So in my opinion, I feel like they might drag this out a little bit longer and create something like a bear flag. And then maybe a lot of those SPY puts and those Apple puts will be closed out before the end of May. Maybe we could see this tiny little rally, possibly back to this area on Amazon, like right below the 200, right where we really started selling off. Maybe we could rally back to this area, right on the stock split or after the stock split. And then who knows what's going to happen on CPI day. That I really don't know. That's where things get a little bit hairy, but I do think it's entirely possible that we could see some sort of rally on Amazon stock split. Even though it doesn't fundamentally do anything for it, we have seen a lot of stock market rallies just based off stock splits as well. So it could entirely happen. I wouldn't discount that it couldn't. So yeah, that's the one main trend line we want to pay attention to. Now lastly, Google. I will say that Google's stock split actually happens on July 15th, and that's when we're going to see the price change. So right now there's one thing I do notice on Google is we have this downtrend line that's been acting as support, and this actually caught the body of the candle. And we also have this other downtrend line that's also been acting as support. And this one caught the wick. So we have these two lines of support. One caught the body and one caught the wick. We also have this longer term trend line. If I zoom out here, and this caught the body. So we're at a very, very, very important level on Google. If we start cracking under this area, I truly think that Google can start seeing some serious pain. And I think that's going to be a lot of the stock market crash that could happen. Could just be from Google breaking this area. And we did break below the 100-day on the weekly time frame. So you can see last week we're just above that. Now this week we're below that. So things definitely are looking hairy on Google. And we do have this 200-day moving average all the way over here. So this could potentially act as support. So this 200-day weekly is at 1,742. And of course Google can have weak earnings, and that could really be what takes it down to this level. And let's see. Oh yeah, I wanted to look at Tesla options as the last thing. So right here on Tesla options, there is a lot of put premium. I mean, let's just pay attention to these big ones right here. So this is going to be right before earnings, I believe. So right before earnings, there's almost 30 million in puts, and they got the strikes for 655 and 625. Now, there's also quite a bit of put premium for the 21st as well. This is going to be the 21st of June. So here we have 11.13 million in put premium. But we also have some calls. So we have 3.57 million in calls. So, this could be covered calls. Not entirely sure. We also have another one right here. Not a lot of open interest. So, in my opinion, these are likely covered calls. And if you notice right here, these strike deep in the money. So I would think that this is just somebody taking a bearish stance, just with how deep in the money these puts are. So that's basically it for my analysis, and I hope you guys enjoyed this video.